Hello, everyone. We have Ajay and Ganesh for a next fireside chat session, that is Investors Vantage Point, Portfolio Learnings and Emerging Markets Perspective. Welcome, Ajay and Ganesh. Not taking much of your time so that you have all the time for your session. I'll just hide myself and you all can take forward the session. Thank you.
Thanks, Jack.
Thanks, Jagruti. Hi, everyone. A very good morning. Hope everyone's had a good start to the day, and we definitely had a good start to the event or the session with Samir and Anup talking largely about ASEAN as a region and coming from an IFC perspective, and Samir asking some interesting questions. The next one, the one that I'm lucky to moderate with Ganesh, this is the only session which is going to have an investor who has a portfolio diversified within the region. So welcome, Ganesh, on this one.
Thank
Uh,
you.
I had a very quick look at the Kona Capital website, and two things which kind of stood out for me: fintech for inclusion in emerging markets as a mission statement, and access, quality, and markets as a vision or a measure of social returns of investment. I think there couldn't be a better way to set the context for this conversation that we are going to have next. So to start off discussion, so Kona Capital has been around for a while. I mean, in public eyes, probably since 2015, but perhaps the DNA goes back a little bit further beyond. If you can call it incubation or getting incubated, for lack of words, under Axion. However, the focus has all through been on fintech, on emerging markets. So, can you talk us through a little bit about the overall ethos of Kona Capital as a venture fund, and how you work a little bit differently than a traditional probably investor or a fintech investor? Because it's very clear that Kona Capital, though the name has capital in it, is not just about being money bags out there, but it is much beyond that. So, over to you.
Sure. Thanks, Ajay, for that intro. And to your, to maybe succinctly respond to that question, I guess if we look at we should probably look at two things. One is the origin of Kona, and two is the founding team of Kona. So all of us in the founding team, the three of us who started Kona, come with a context of having been entrepreneurs in the respective emerging markets that we all manage today, and in more mature venture ecosystems. And we've also been venture investors in both our ecosystems and in the more mature ecosystems. Like I started my career at Greylock in the Valley, and similar to profiles similar to the profile of my partners. And over time, we have sort of evolved into figuring out how what we find exciting, which is backing innovative entrepreneurial opportunities. In most cases, the innovation is driven by some technology differentiation, and usually this is applied tech. There are times when there could be deep tech solutions, but usually this is applied tech to be able to help develop innovative solutions to make a difference at scale, and to large base of consumer or SME segments in these emerging markets, learning from the back of our early professional careers in this developed market. So the whole thesis of Kona is how do we back entrepreneurs who bring this technology, innovation, etc. in applied manner, not in a conceptual manner, but applied manner to real life problems in emerging markets. And if you look at and because we have experiences at both ends, I think we are hopefully able to straddle the two worlds and help help such solutions develop. Also, if you look at the markets we are in, there are about 14 markets we invest in. We are investing in today between Asia, Africa, LATAM, and GCC. These are all markets where 60 to 80% of the target segment is actually disenfranchised, whether they are underserved or unserved. So, frankly, our social mission is not removed from our commercial mission, which is only if we are able to back solutions that can solve some of these problems at scale, can social impact be created meaningfully. And by the way, if these problems are solved at scale and we build sustainable companies, they have to be able to deliver commercial returns, right? And I guess it's a challenging problem to hypothesis to kind of demonstrate, but we believe that if we take a 15-20 year view at Kona, we'll be able to do that. Even in the 6 years since Kona has become an independent brand, as you alluded, I mean, hopefully we have been able to showcase some proof points already. in the market between our portfolio successes and the multiple funds we run and the kind of global institutional players that we have been able to bring on board as investor partners.
Nice. So, okay, so connecting a little bit back into that and to the opening remark that I made, access, quality, markets. I mean, all three of them, they pretty much stand out as strong pillars or propositions for companies who are looking at Kona to get Kona onto their cap table as a backer. But for fintechs which are looking at South and Southeast Asia, and if they're pitching to you, how would you kind of elaborate on the aspects of access, quality, and markets? I mean, because they need to understand this a little bit deeper than the capital part of it. So, how would you elaborate the pillars that Kona is standing on?
Sure. So, we use the access quality markets framework largely for being able to measure the impact the companies are making more tangibly. But that also in some ways helps obviously understand the business potential of the companies as well. So on the access side, it's really trying to understand, the use case or the problem statement that you're trying to solve, and are you creating some kind of access or expanding the scope of availability of these services through the innovation or solution you're developing. So this could be remittances in emerging markets, or this could be credit or lending or financing solutions to people to whom it's not available traditionally, or insurance solutions where it's needed but not offered in a traditional way, where it's hard for a lot of lot of the common population to digest and consume. So it could be across the spectrum, or in financial advisory solutions, so on and so forth. On the quality side, it's really more about saying, okay, are we offering the solution at a sustainable price in a fair manner, where it then has the scope to be able to scale to a large set of the population? Because at least our belief is, if it's a solution that's taking undue advantage of the customer in terms of how we price it, or in terms of hidden pricing, hidden charges, or sort of being manipulative, it's probably not going to be sustainable. So we measure things like how transparent you are in the services you offer, in the way you communicate with customers, how you educate them, what's your pricing, etc. And markets is really, frankly, a derivation of these two, but also more broadly how we build the company. Because if you want to build a market leading company, if we have the right foundation in terms of the values, culture system of the founders, how we think about bringing, what kind of folks to bring into the company, build the product, customer centric view, so on and so forth. And with this access and quality framework, we believe that you can establish a role model company in the market, which will probably motivate lot others to kind of jump in and help solve these problems at scale.
Sure. So I'll connect a couple of points that you made. So you spoke about the sachet kind of insurance products. You spoke about remittances and lending. So one of the unmistakable aspects of fintech in South and Southeast Asia has been the consumerization or the democratization of fintech. So if I can elaborate a bit on that, fintech which is bundled or riding on a distribution network that stems from something else, which might be kind of ride hailing or grocery or delivery apps and things like that. So if you were to take examples of, say, companies like a Tokopedia or a Gojek or Grab, all of these are like pretty much unicorns, but none of them really started off as fintechs in the first place. Given that context, if someone is looking at building out a fintech in the region, which is a direct to consumer or a B2C kind of a fintech, is the bigger opportunity to build fast and get acquired by a unicorn, or is the play a little bit different? So you already have a company in your portfolio which got acquired by Gojek. So you have some context or a case example there. So if you can elaborate about going about building a direct-to-consumer fintech in the region.
Yeah, that's a good question, Ajay. And there are actually a lot of questions probably bundled into that. There are two different things, actually three different things happening, right? One is, if you take pure financial services, if you take every 7 to 10 year cycle, you will see unbundling and rebundling as innovation happens in the market. With every new step of innovation, you will see unbundling and verticalization of services, and then you'll see rebundling at some stage. So the unbundling was when fintech were conceptually still new and digital finance was new. So you saw payment companies, lending companies, investment companies, insurtech companies, and different themes are in different maturity cycle. But you're starting to see now the evolution of neobanks in some market, which is in some ways rebundling, or companies which are dominant and successful in one space trying to become neobanks or full service players. So you will see varying degrees of that trend, and because of that, I think there will be a few platform leaders and market leaders who can survive on their own. I mean, they might eventually get acquired, but they probably would not be looking for that quick exit story. And frankly, our interest is in backing those, because you need to be really good at something specific and own the market on something specific, and then bundle around it or build a bigger play. And if you're really good at something specific, hopefully you'll have an independent play. Even though, yes, there is always a debate on which solutions are features and which solutions are product, and we have that debate internally. But generally, that's the thesis we have seen. That's one. The second point is, you're also starting to see an embedded finance play evolve in a much bigger way. And fintech or financial services happens to be we believe, one of the best areas to do that, because we sort of look at finance or financial solutions as oil that greases the economic engine, whether it's supply chain, whether it's education, healthcare, commerce, agri, so on and so forth. So we have now multiple portfolio companies that are at the segue of supply chain and finance, agri and finance, healthcare and finance, education and finance, FMCG or retail tech and fintech, so on and so forth. Now there, you're pretty much creating a new generational sort of companies which are trying to blend two different verticalized needs into one and create a much more stronger solution. And number of them we think have a much longer runway, because if you look at the generic platforms, digital platforms that are being built, it's not like a lot of them have the ability to naturally absorb these companies, or they should be also, because it takes a lot of effort to integrate these things. Yes, eventually they might at some point, but I don't think they would naturally jump at acquiring them at the outset. And the third point is, I think third point sort of goes back to the first statement I made, which is you really have to be very deep and good and solid at your some first solution which you have to crack at scale in a profitable way and with strong unit economics for you to start building around it. I think there are several large digital platforms today which are still figuring that out, whether in India or in Southeast Asia. So sometimes making a pretty significant acquisition becomes challenging to justify. It wasn't challenging 2-3 years ago because there was momentum around it. I think post COVID, it's becoming more challenging, where people are saying, let's show the value for money. Why are you going to acquire something unless we can make a strong synergistic case? So I think the jury is out. It's probably not going to be as straightforward. Specific to the point you made on coins, which when Gojek acquired was the largest digital payments platform in Philippines. I think the challenge there was 4 large players from Asia who were very excited about payments in Philippines and wanted to enter the market. And they were all willing to put in at least a couple of 100 million behind the payment story in Philippines. And all of us, Coins by far had, been a trailblazer in even 3 years of having been around, built the largest, payment throughput business at that point. But I think what it meant was the company had to raise, a big war chest to then be able to take it on. And it was really a call between the founders and the board to say, okay, you want to raise a war chest and go on for a long time in a market like Philippines, which is an interesting market, but can really sustain 4 large global decacons coming in with a couple of 100 million each. Or it will be a bloodbath and we'll all lose a lot of capital before any outcome is seen. So that was really the debate, and Gojek made a very attractive offer to the company, and finally they went with it.
Got it. Thanks for that context and insights on building B2C kind of fintechs in the region. So that brings me to the next one, which is moving away from the consumerization or the B2C side of fintechs to B2B. So Buku Warung, Ula, and Coinworks, 3 Indonesian B2B fintechs which are there in your portfolio. Payments lending have for very long been the poster child of fintech investments globally. But having said that, in the last year and a half or so, you're seeing kind of B2B payments and B2B lending also getting funded. So how do you see this opportunity panning out in the context of ASEAN or the extended Asia region? And the reason I ask is because even though we talk of ASEAN or Asia as a unit, essentially you're talking of many countries, each one not so big, and different regulations across the borders. So, I mean, given that context, and because there are different regulators as well, it is not really a regional play. Like you said, I mean, even in case of, say, coins, I mean, it was basically a Philippines play, right? So, given that context, I mean, talking about B2B fintechs and the ones that you are backing and what you're seeing in the region, how do you see this kind of going about?
Yeah, that's a good question, Ajay. I think there are two parts to it. One is the uniqueness or the uniqueness of newer models that we're excited about, and the second is conceptually how do we sort of look at this place and are they truly regional in the
Hmm.
sense people think about it. I think you made it's a very valid point, which I think is a lot of times forgotten from a global context. Is that obviously it's a set of several countries,
Hmm.
and Malaysia and Thailand and Indonesia and Philippines and Vietnam are quite different, culturally, from a digital evolution perspective, from a B2C or B2B perspective, how financial services works, how regulators operate, etc. So yes, I think there are certain things which can probably be translated across multiple countries, but it does require fair bit of effort to go from country to country, and doesn't always naturally lend itself to extension. In terms of how we are looking at opportunities, I think as we look into the future, we believe that especially classical financial services opportunities like lending
Hmm.
will require a right to win, which means it cannot be, if you are a classical lending company like you were 7 8 years ago, you basically go out and acquire customers, do KYC, underwrite them, sanction, etc. You still might have a play, but we are not sure that you will really create a differentiated play. What I think a differentiated play requires is you somehow need to be embedded
Mhm.
into sort of life cycle of the customer's needs, as opposed to just saying, I'll be a lender, you can come and take loan for anything. It has to be weaved into your supply chain,
Yeah.
maybe into your purchasing, maybe into your the vendor side supply chain, or on the purchase side supply chain. All it has to be embedded at point of sale, as we have seen with buy now pay later solutions on the consumer side. But you really need to have a right to win,
Hmm.
or what we are seeing with some mobility and finance companies, or agri and finance, as I mentioned, or with ULA, where it's really supply chain and finance, or Buku Warung, which is really establishing the financial discipline and foundation on accounting and bookkeeping. And then
Hmm.
on top of that, really building this. So you need to earn a right to win, to understand a customer better than any other next door lender. And we think that's how the solutions will be built, also because that gives you stickiness of relationship, and it gives you richness of data, which is
Yeah.
becoming very critical and essential to really build a sustainable play, as opposed to just being one more sort of lender in the
Yeah.
market.
Yeah. Cool. So that gets me to the last but one question. So, like you kind of started off the session on note about Kona having a portfolio which stretches across a whole bunch of emerging markets, Africa, LATAM, South and Southeast Asia. Have you really seen kind of cross-border extension of companies within your portfolio? And the reason I ask this is because we keep talking about, I mean, even the opening session when we had Samir have a chat with Anup from IFC, we spoke about business successful fintechs going from one market into another. How easy or difficult is it for startups to navigate which are not from ASEAN or South Asia as a region, Southeast Asia as a region, and getting into that market? I mean, within your portfolio, have you had companies that have successfully moved from, say, LATAM to Southeast Asia, or Africa to South Asia? And is it even possible?
Yeah, very good question. I think, and I think a generic answer to that is probably very risky, because people hear what they want to hear, and there are several companies which have, for example, come into India from Africa and completely failed, come into India from Europe and failed, and they came in only because, planting a flag in India, or saying I'll plant a flag next year, was helping raise the next $100 million, right? And that's purely the reason why they came in, including companies which had started in India, failed, went to Africa, and then came back
Yeah.
just to raise the capital, right? So I think it's a little bit of a generalization is dangerous here, but is it possible? Yes, I mean, we have seen some portfolio companies, like some companies by nature are, like for example, remittance or cross-border payment companies by nature are across, regional, right?
Yeah.
So we have a company called Azimo, which is anchored in Europe but has a very strong Southeast Asia and the Sub-Saharan Africa corridor, especially on West Africa side, because by definition it's that kind of a company. But to your point, there are two types of companies we see broadly, right? If you take India, Brazil, Indonesia. You see certain kind of companies because they're in big enough markets. These are deep enough markets, and they try to build for those markets,
Correct.
right, first and succeed. And sometimes that itself is a lot. You can build unicorns just doing that. We have
Yeah.
now, in the last 3 years, we have two new unicorns in our portfolio, both of which are built for the countries, India and Brazil. At the same time, you'll see companies also starting in newer markets, like it could be Colombia, it could be Peru, it could be Philippines or Thailand, right? Which or Kenya for that matter, where they know that from day one you have to really expand beyond your markets to build a large enough institutional play. You don't want to be a lifestyle solution. And there, the companies are fundamentally the smarter guys build differently from day one. But when you build differently from day one, it may or may not work for the local market, or it might be an overkill for the local market. And that's the kind of tussle people are stuck between. And when you don't build differently from day one and try to expand, you start seeing the kind of challenges that I was talking about with some European and African fintechs that we have seen in India.
Yeah.
The second dimension to this is if you're a direct to consumer play or direct to SME play versus if you're a tech play, like a credit decision company, alternate company versus a B2C company. It's much harder for B2C companies or direct to consumer companies to expand than it is for technology plays. Now, having said that, the ability of technology plays to build a large enough solution and create value for themselves in terms of being able to monetize is not easy. So I think these are the factors, and the answer is different for everybody. But these are the factors I think we'll have to think about when we jump
Yeah,
in.
and also the reason the question kind of I really brought up is because I mean something that you alluded to in your previous point. I mean Thailand, Indonesia, Malaysia, Philippines, Vietnam, as close as they might be to each other, culturally they're like very different, right? I mean, given that context as well, I guess even within ASEAN as a region for companies to successfully grow from one market to another is equally difficult. I mean, people from outside could view it very differently that hey, you're already there and thereabouts, but then it's a very different play. Also, given that regulators are different and maybe everyone is not up to the same speed. So, so yeah, finally, I mean, getting to the last question before I think we can take one or two from the audience. I mean, we cannot end a conversation with an investor without touching upon the point of an anti-portfolio. So, if you could choose one company which could have been on the portfolio wall, but instead is on the honor board, so to say, is there one?
See, I think frankly, fintech in Southeast Asia is still early to actually have an anti-portfolio. I'm very confident we will have it. Please ask me in a couple of years. But yeah, I think it's still early days in
Okay.
Southeast Asia to have an anti-portfolio.
Okay, cool. So I'll end my questions over there. Let me just look at the chat window if there is anything. If anyone in the audience has a question, you can either do a raise of hand and we can get you on stage, or you can just put it out in the chat window and me or Jagruti can kind of read it out. Any questions for Ganesh? This is the only investor guys in the entire day, so maybe there's like one or two we can get answers to. Jagruti, Sumit, you guys have any questions that have come to you? I don't think so. No questions here. Okay, last call. Raise of hands, or else we just wind up the session and move on to the next one. I don't think there are any. Yeah, I think I can see one raised hand.
Yeah, I'll just.
Yeah, this is Vijil Vishwanathan. Yeah, you can give him access.
Yeah, that's given.
Yeah, actually, there are two questions, I guess. But yeah, please go ahead.
Yeah, so what I wanted to ask was, do you think Indian fintechs are strong enough or mature enough to actually compete in US or European markets where the fintech game is matured for to a certain point? Do you think we have that opportunity and strength of team and tech?
Yeah, it's a good question. I think one of the challenges with Indian companies are they're typically very inwardly focused because we're in a big market or supposedly big market. And Vijil, the answer to your question for enterprise or tech-enabled companies versus customer-facing companies might be different. So I think, frankly, and it's a longer discussion, but I think it's less about the tech or team, because if you ask me if we have those capabilities, Indian companies have those capabilities. If we have it in India, absolutely, we have seen it in India. And also some of the ecosystem in India is more evolved. So the digital ecosystem now between UPI and account aggregator and Okin and all of this is more evolved. So frankly, it's also pushing the envelope for people to become more evolved in solution development. So I think the capabilities are there, but it depends a lot on how people think about their solution from day one, in terms of it's a country specific or regional or a global solution. Is it front facing or tech and data enabled? And which markets would be similar enough? And you have to earn the right to win. I think that's the biggest issue. You have to first have a firm footing in what you're doing in your core market, whether it's India or it's Indonesia or Singapore, and then figure out how to go out. Whereas a lot of times what I see is expansion beyond your core country is sometimes out of desperation or for optics in several cases, and that frankly is a challenge which will not pan out well.
Makes sense. Makes sense.
Sure.
There is one more question which we have from Vishwanath. We'll take that as the last one. So this one again is, which is a sector in fintech which is booming in Southeast Asia, crypto or lending?
Yeah, they're two very different things. I think, I think lending in terms of booming, let's just take SME lending, right? Where we have 8, 9 portfolio companies across markets, 9 actually. It's an evergreen sector. The gap is massive. So when you talk about booming, I think, yes, there are a lot of companies which come and try to solve it. But in terms of really being able to create meaningful enough companies, like we see Coinworks in our portfolio, which we are very excited by, is now on that path. So the opportunity is still big, even though you might feel like there are a lot of companies. The opportunity still is there because the gap is still very significant. So, but like I mentioned earlier, I think the right to win in lending is going to come in a different way. It's not going to come only by straight up lending, but you have to earn your right to win through a deeper customer relationship. And crypto is a whole discussion of its own. So I don't think we have time for that. But frankly, currency wise, I think it's going to become a regulatory play, because regulators are not going to let private currencies prance around in the market, and they are going to probably take a more active role. But I think there is a life beyond currencies in crypto, and in how blockchain solutions can be used for private use cases within closed loop networks for different things, whether for moving money, for supply chain, so on and so forth. I think, and I'm glad this question was asked, because the challenge, I think, though, is people are getting carried away by the whole trader mindset. There's so many cryptocurrencies now, and a lot of folks, the smarter guys, are making money just by trading and doing extremely well. So we are seeing very, very, very few teams and companies that have the mindset of building a sustainable company around the blockchain tech. And frankly, we are looking very actively at it because there are lots of use cases that can be solved. But dominant mindset today is really trading on crypto and pulling up, like sort of creating a fast and loose and quick company. And that is hurting the ability of this to be adopted at scale.
Cool. So I think we'll just wind it at that. So thank you so much, Ganesh, for taking time, and that too at a fairly short notice. That's probably the beauty of getting events done virtually. But look forward to chatting